Hello guys, welcome to this great channel, Turtle Soup Trader. Guys, if you're new to this channel, please subscribe and turn on the notification bell so that whenever I post any video, you won't miss any of them. So in this video, I want to do a very quick market review for this week. I mean, it's already Friday, end of the trading week, but I understand the week is not yet over, but I won't have time by weekend based on the kind of job I do. So I just want to do this video very quickly before my time elapses. So guys, sit down and enjoy this great video. So this week, virtually this week, I missed on my setup. I wasn't on the chart when they happened. It's unfortunate. I have to do my job, but of course I take responsibility for that because you could have set a limit order. You could have, looked for 2 minutes, 3 minutes inside your job to, catch this setup. It's kind of holding yourself accountable for every action and inaction that you take, guys. So it is what it is. I missed the setup. That's my fault. So very quickly into GU. On GU, guys, I have been very bullish on this pair for the mere virtue that DXY has been dropping. So as you can see on this chart, guys, DXY has been dropping. So we know the relationship between GU and DXY. So as DXY is dropping, we are expecting GU, of course, to rally up. So coming into this week, from Monday to Friday, I was expecting price to draw lower to this sell side liquidity. Guys, it's very obvious that dollar wants to take out this low. DSY wants to take out this low. So guys, it was very obvious. So that made me to look for buy opportunities on GU, although I missed that very good opportunity. This is on the daily time frame. As you can see, this rectangular area marked at is a weekly FVG. It's a weekly FVG, guy, and price found support inside that weekly FVG. So going down to the 4 hour, this is it. This is what ICT describes as one shoot, one kill trade. Just catch the low of the week and ride it to the end of the week, to the high of the week. So Monday, as you can see, formed the low of the week. Very unfortunate I missed this entry, but I have to review the market. That's how we learn. So if I were to be in this market, how could I have done differently? So guys, it's very obvious. The blue line here indicates the weekly opening price. This low here is the sell side liquidity I was expecting price to take out. So very quickly, let me type out my trading just in a very short form, my setup. So number one of my setup is that I have to know the weekly bias and I have to work with the weekly bias. Number two is that there must be some form of liquidity grab in this market. Number three is that there must be displacement after this liquidity grab. Displacement with or without market structure shifts, guys. With time, guys, you get to understand and believe the displacement even when there is no market structure shift. It comes with experience. And finally, that's my entry inside an LVG or just change in state of delivery. Then my SL will be the low, the short-term low form, and my TP will be, opposing PD array, which could be, swing high, short-term low, on the other side of the market. So guys, although there are other things that add to the confirmation, but guys, this is just the major criteria. There are other minor criteria, and these are things that add confluences to my trade, but these are the major ones, guys. Let's work with this. So as you can see, guys, going with this, on Monday, on Sunday, the market opened rally lower. Entering Monday, it went down, took out a sell side liquidity. So guys, the bias is bullish. That's number one. Is matter is the criteria is ticked. Then number two, liquidity grab. Yes, there is a form of liquidity grab here, which is the sell side liquidity. Three, there is displacement. Is there displacement? Yes, on the lower time frame. That's why I go and look for my entry. And of course, I trade London and New York section. So obviously, during the London section, there was no setup for me during the London section. But during the New York section, that was when price offered me a great opportunity to partake in this setup, guys. But I wasn't there anyway, so I missed the setup. But this is me studying the market, journaling my chart. So we keep learning, guys. So during the London section, even though we are below the weekly open, but I still wanted to see that liquidity rate. So some of you could have said, yes, if that's the case, I could have cut this sell down to this level to take out the liquidity. Oh, that red line has already disappeared. Let me bring it into the lower time frame. So, okay, very quickly. Let me make it red. The visibility, okay, is there already. So going back on the lower time frame. So very quickly, guys, on Monday, as you can see, the red line is that low, and that low must be Friday's low. If, yeah, I'm very sure that should be Friday's low, and that is a very big form of liquidity in the market. Previous days and previous highs are very big liquidity points in the market. So, guys, immediately price went down, started from London to move down, and took out the low end of London, beginning of New York section. So entering this market by 8 o'clock, and I saw this massive displacement. Guys, uh, remember the criteria. One, there must be weekly buyers. Two, there is liquidity graph. And three, there is displacement. Guys, you can see this very huge green candle here. That's the displacement, guys. So that displacement is very obvious. So once there's this displacement, guys, what do I do? That number four, I look for a change in state of delivery or a fair value gap to enter. And that is it, guys, as you can see very obviously. And number five, I enter the market. I enter the trade. What's number six, guys? My stop loss should be below a short time low. As you can see, this is a short time low here, guys. So that's my stop loss. And my TP should be at the opposing PDRA. Of course, long term I'm bullish. But if once price has reached my 3 to 1 level, remember guys, this blue line here is the weekly opening price. So if I'm bullish, what am I expecting price to do? I'm expecting price to go below the weekly opening price, first of all, to manipulate sell short traders, people that are looking to short this setup, and then grab the liquidity and rally up. So it is not wise for me to take my profit at this high, which is the opening price for the weekly time. So guys, as you can see, if I were to take my profit quickly, I must wait for this high, for this opening price, weekly opening price to be rated. Then I can now close 90% of my entry and leave the rest to run. So as you can see, price continued and continued moving upward. So if I were to trade on Tuesday, obviously I couldn't have got this setup because that's not my um, typical setup. There was no form of liquidity grab, you know, and market the price has already moved above the daily opening price, which is 12 midnight New York section. So guys, also Wednesday I missed this opportunity on Wednesday. But it is what it is, guys. That great entry opportunity, guys. Remember, there must be some form of liquidity grab, and our buyers must be there. So our bullish buyers, one, two, liquidity grab. What was the liquidity grab? This Asian low was taken. So what's the third one? There must be displacement with or without market structure shift. So guys, as you can see that displacement uh, on the New York section. So by 8 o'clock, that's it, your 8 o'clock. Is there displacement? Yes, guys, there's displacement, as you can see. But was there obvious market structure shift on this 15 minutes time frame? No. Yes, on the lower time frame, you may see, but here on the 15 minutes time frame, once I have seen that obvious displacement, of course, there's no need for me to go lower. But if I were to go lower, let's check the 5 minutes time frame on Wednesday. On Wednesday, okay, on Wednesday, yep, that's it. That's Wednesday for you there. Yes, there was market structure shift on the 5 minutes time frame. So guys, as you can see, there was none on the 15 minutes, but there was on the 5 minutes. So if you do not want to, continue moving lower, you can just continue with the 15 minutes time frame and move on. Remember what I said, guys, there must be this displacement, but it may be with or without market structure shift. So on the 15 minutes, there was no obvious market structure shift, but on the 5 minutes time frame, there was obvious market structure shift, as you can see here. So what will be the next step? Of course, I'll enter this market like ICT always says, because most of my teaching, most of my trading pattern is inspired by ICT. When there are two fair value gaps, what do? It can, take the one above or come down, but you must enter the trade with the one above, still considering your risks with the one below, just in case. So remember, what's the fourth one? Entry. What's the fifth one? Your stop loss must be below the swing low, the short term low, I mean to say. And what's the next one? The sixth step, you target 1:2 or 1:3, or the opposing side of the market, the opposite side of the market, guys. So as you can see, this could have been a winning trade, of course. Then Thursday, Thursday didn't offer me an opportunity, but of course, I could have held this trade if I were in this trade, because my higher time frame objective is what is pushing me to enter this setup. So Thursday there was no entry for me. Oh, so guys, so as you can see, guys, moving forward, there was no setup for me on Thursday. But what happened on Friday? Of course, I wouldn't have taken this trade. Why? Simply because Monday and Wednesday has already given me my entry and my profit. So what's the aim of going back to this market where you may most probably return this profit back to the market? So once I've taken the two very good trades for the week, I'm out of the week, guys. That's it. So even if I was to trade this particular day, I wouldn't have taken this trade, even though it is a winning trade. The same principle still applies. There was, our higher time frame still bullish. There was some form of liquidity grab. As you can see, the Asian low was taken. Was there market structure shift? Was there displacement first? Yes, there was displacement. Was there market structure shift? Yes, there was market structure shift. Was there change in delivery or fair value gap? Yes, there was change in state of delivery. As you can see there, this other block, price came back, tapped into it, and rally up, and targeting the opposite side, which is Asian high. Price could have hit TP and then came back. Of course, this throughout the week, the market has been moving up and up and up and up. So I'm not surprised that Friday, we'll go into consolidation or even reverse. So that's why it will be advisable to trade on this particular
day of the week, which is Friday, where market has already made a very huge movement during the week already. So, guys,